Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grevner with us as always to talk all things markets. University of Missouri, Scott Brown. Happy Friday to you, Scott.
I'm glad it's Friday, Megan.
I am too. I had a long weekend. We'll see it. We should see a shortened holiday week next week as well on the slaughter side of things, with Monday being the celebration of the Martin Luther King holiday. And then it's into my twins' birthday is on Tuesday. They turned 4.
And we have students back on the Mizzou campus starting on Tuesday. So back to the next semester.
That means we're on the uphill climb to spring and sunshiny weather and no more winter watches, which I'm not used to here in the Mid-South.
Hopefully it's the last snow of the season, but maybe I'm premature in saying that.
I would hope so. All right. Today we're going to talk a little bit trade. We're going to talk some jobs. I want to talk a little bit. No, we're not talking that. I have the wrong notes up today, don't I? I do.
We're going to talk consumer sentiment and retail prices and maybe a little WASCI today.
It is definitely a Friday, and this is definitely live. So everybody who's watching gets to see me not be perfect on a regular basis, which is not good for me. All right. So before we get into all of these other reports, let's recap what happened this week in the markets.
Yeah, if we start on the cattle side this week, Megan, we saw live fed cattle that were about $2 lower this week. Those feeder cattle markets, they were generally steady to $3 lower. We had some price strength in a few of those markets. The February live cattle futures contract was up 20 cents this week, while the March feeder cattle futures contract closed down a little more than 50 cents on the week. Choice box beef prices were higher this week, up about $12.30. That now puts them $70 above where they were a year ago at this time. Pork cutout, the barrel and gilt prices this week were unchanged for the week. The February lean hog futures contract was up $1 on the week. We did see strength in the pork cutout value as well, up $1.20. Both hams and bellies were up this week, I think, helping that pork cutout value gain.
And when you say hams and bellies were up this week, there was one day that I about fell over when I looked. I think bellies were up like 20 something, 15 something. Hams were up almost 40. It was really kind of a solid week for them when we look at the cutout side of things.
Yeah, that's right. So maybe some signals that we're going to get some better hog prices as we look ahead as well. We'll see what next week brings for us in terms of those pork cutout values.
All right, to kick things off today, let's talk retail prices and take a look at those numbers for the last month of 2021.
Yeah, so we're actually, it's the first time we can say this in a while, down in December 21. Relative to the previous month in both beef and pork prices. The choice retail beef price was down 2.4% relative to November, and the retail pork price is down 1.8% relative to November. So it's a modest decline, but after several months of what was increasing or most of the time increasing, we took a little seat back. Now, I will say, you look at these prices relative to, let's say, a 2016 to 2019 average, and we're up more than 25%. So still high relative to historical standards in terms of those prices. If we look at some of the components, I shouldn't say components, but some of the individual cuts out of that report, we saw similar things. So all the beef components that were also down in December relative to November. As well on the pork side, we also saw declines there. Your favorite bacon product was down 0.7% in December relative to November.
All right, let's talk consumer sentiment as we take a look at those numbers. How much are we watching what's going on with these COVID surges as it relates to sentiment and what's going on the consumer strength side of things?
Yeah, so I do think the surge we've seen in COVID cases has created what's a lower overall index of consumer sentiment for January 22 relative to the previous month. We were down 2.5% month over month. We are still down almost 13% year over year, by the way. So just to put in perspective, I think that drag in COVID cases has certainly, or the drag from increased COVID cases has certainly been part of the issue here. I also say I think inflation continues to get consumers' attention, and I think both of those things really have led to what's that lower index for January of this year.
The big report this week, supply and demand numbers. As we take a look at those, Scott, let's start on the pork side of things.
Yeah. So we should start, I think, on the pork side of things, given USDA's January report. What's roughly a 500 million pound decline in net exports of pork out of the United States in 2022 is the big news out of the report. That decline is really a result of what USDA is now saying, a change in overall imports of pork into China. For their January report, they came in at 4.2 million metric tons of pork to be imported into China in total from all sources around the world. That's a change from 4.75 million metric tons back in October. So a little more than a 500,000 metric ton decline, according to USDA. And I think that has a lot to do with just what's been some recovery in that Chinese hog herd. So less demand for pork from other countries, as a result. And let's hope that that's as far as we have to go. We would have talked out of that USDA December report a net export number of 6.2 million pounds that's now at 5.7 million pounds. So that to me is the big piece of that. Now, the good news out of this report is we keep raising our livestock prices. $2 more on fed cattle, 50 cents, even with the change in pork exports, 50-cent higher barrel and gilt prices. Chicken's the one that really took off out of the USDA report this month, up 10 cents relative to what USDA said back in December. So more positive news on the price side, despite what was a modest backup of more pork back into the U.S. market this year, according to USDA.
We almost have to see a rise in prices if we're thinking about the bottom line, right? As we're seeing some of our input prices potentially go up and projections for those go up as well.
Yeah, absolutely. And I think that's the point that is really important to make. Those input costs are likely pretty stubborn to go back down anytime soon. So not a lot of possibility of lowering those input costs, yet I sometimes say I worry about downside risk in some of the prices that we face. So let's take a few of the biggies: ASF outbreak in the United States, some other trade disruption, domestic demand for beef and pork that somehow go lower this year. All those things worry me in terms of that downside risk. Not that I'm predicting that, just that I know there's more downside risk in those markets right now.
And that's something that we can't let slide, right? Just because things look rosy at this point doesn't mean they're going to stay that way forever, which is, I think, so important in the conversation that we have about risk management and risk mitigation.
Yeah, absolutely. So feed costs is another one here, Megan. We already have corn and soybean meal prices that are higher than we've seen for a while. And USDA, in fact, increased the soybean meal price $45 a ton this month for the current year that we're in. If we get out this summer and talk about dry weather, I know which way feed costs go, and that's up. And so we have a lot of these risks that, so I always go, even if it's a good crop, I'm not sure we get a lot of decline in prices for feed, yet a drought would give us much higher prices.
So I want to talk to you. You mentioned the drought situation. Hay stocks also were dropped, 5% in this month's report. As we take a look at that, knowing what we know about how the winter has been for parts of the country, how does that play into the big picture for cattle producers as they're thinking about cattle numbers. And I know we've got a big report coming out next week that we're going to keep our eyes open for.
Yeah, so we're certainly, again, tighter on hay stocks. You're correct, down 5% relative to where we were December 1 of 2020. To me, it just reminds us that there's less of a shock absorber, if you will, to more dry weather as we look ahead in 2021. Now, I think a lot of things are at play here. Strong returns for things other than hay production have allowed some acres, I think, to shift around or folks to be more cautious or more taking advantage of the opportunity to produce some other crops. So I think that's also tightened stocks up. We're becoming more efficient at feeding that hay, maybe making some higher quality hay. If we're going to compete with corn and soybean returns for some of that hay ground, we need better returns on the hay side. So I think all those things have been at play. But your point is, dry weather again this summer could certainly shoot hay prices up more than we traditionally think about, as there's just not a lot of buffer there on hay stocks to absorb dry weather.
Does it also potentially give us some more price support on the cattle side of things? Because if we're following a really dry year in 2021 with another really dry year, and all of this, right, is speculation and just conversation, but following up with another dry year, we saw a big shift in cattle numbers, or significant shift in some cattle numbers in 2021. Does that continue to put pressure on some additional contraction?
So it certainly could. And for me, some of that answer to the question you're posing will be, where does the drought continue if it does? If it continues in the same places where it did in 2021, that's downright devastating. If that drought were to move around, maybe there's a little more flexibility in the Southeast, who's had pretty good weather for the most part, relative to the Dakotas having another round of drought. So it is going to depend on where it's located. But yes, I don't want to overstate, but I've said I'm more bullish cattle than probably anything else in 2022, and that has just a lot to do with what I think is tighter supplies as we get further through 2022.
All right, I think that's it for us this week, correct?
You covered all the reports. Very, very good as always, Megan.
Some days I have all of my I's dotted and T's crossed. Today it's a little slow off of the get-go. As we look ahead to next week, what USDA reports are we watching for?
Well, we won't forget these next week, because we're going to talk about livestock slaughter and cattle on feed next week as we finish the week. And as you alluded to, we're not that far away from that cattle inventory report. And I would remind folks, maybe that's a time to lock in some prices before we get the report, in case it's bearish, not bullish.
Scott, always great to see you. And thank you again for your comments this week. And we will see you next Friday.
Sounds good, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com and click subscribe. You can also submit questions and comments there as well. And if you're looking for some great podcast material, go to brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.